Good morning, everybody. Welcome to another episode of Coffee and Analytics. I am your host, Nick Powles, publisher of 1851franchise.com. And you're all here for a very important reason. One, I said you're not going to be able to sign multi-unit franchisees. So I have a feeling you want to know what the answer is. What is the pathway forward? And secondly, you're thinking about things that might be upcoming if you are going to the multi-unit conference. Or you're trying to figure out, like, how do I actually market to these buyers that we really, really want? That's what we're going to go through today. Point one, if I took every franchisor that I've ever worked with and put them in a stadium and said, on the count of three, tell me who your target franchisee, your ideal franchisee is. And everybody's going to say 1, 2, 3, the multi-unit, multi-brand franchisee. Makes sense. They're well capitalized, they're scale minded, they know how to do operations. And frankly, one of them, which I could do a whole nother sidebar on, one of them is worth a tremendous amount of enterprise value back to your system. What do I mean by that? We'll get into this in another show. A franchisee that opens up one on $1 million annual concept that pays off 5% royalty is going to be worth $500,000 over the course of a 10-year franchise agreement. A franchisee who grows to 5 or 10 is going to be worth 5 or 10x that franchisee. And really the cost of acquisition to get that franchisee is virtually the same. You're going to spend the same to market to get someone into your system. And so for the franchise salespeople, I feel bad for you because most leaders, CEOs, don't look at enterprise value. They look at the return on a franchise fee. But the multi-unit franchisee is worth a tremendous amount of money, both in royalty and in exit valuation and in validation back to a franchise concept. If I said, what is the number one thing that would help you achieve franchise growth, it's franchisees who are happy and scaling. Franchisees sell franchises better than anything else. And so I'm parking that over to the side. What I did over the last 30 days is I called people in my network. I just picked 10 people to call multi-unit franchisees who I would call higher power franchise owners. Some of them owned multiple brands. Some of them own one. Some of them are still scaling with it. Some of them have stalled out a little bit. Took these 10 people that I knew. I said, I'm going to ask them some questions that I think you should be asking. I'm going to pause there and tell you that's an insight. Blows my mind that nobody, very few brands, have built a franchise sales committee, even if it's an advisory council that is almost done on the side, to say, hey, franchisee X, here's what we're thinking about doing. Do you think this is a good positioning? It'd be interesting to use those who are actually scaling as the voices to help support franchise sales. So point one, if I'm you, I actually create these committees. Now, these insights are going to be valuable because what I was asking is, for question one was, look, you've built up a great portfolio. If I'm another brand and I want to get in front of you, can I? And how would I go about doing so? And what's interesting, like the two easiest places are some of the trade media specific to restaurants, if they're in the restaurant space. LinkedIn came up drastically, or the overarching statement of social media. That's how they get in front of them. Now, another thing that's interesting to me, I've talked with many franchisors every single week. And it's interesting because there's a sense of urgency on lead generation, but there's a sense of patience when it comes to the multi-unit conference. And so I'm saying that because it's interesting when I talk to someone, they're like, look, I don't expect to get a deal out of the multi-unit conference. I just know that I have to be there because there's franchisees there, which totally makes sense. But it's interesting because the idea that I'm willing to wait for the return on this investment versus I go buy Google ads or PR or whatever, and I want an immediate return. It's just fascinating to think through that. I'm bringing that up for you to do some internal thought on this, to say, what are my expectations? Do we have the right drumbeat to get in front of them? So brings me to this month's Coffee and Analytics. Now, as always, there's a whole bunch of you. Thank you for the about 100 people that signed up for this. If you want to use a commenting tool, you want to challenge me on a point, you want to ask me a question, think of this as free consulting. So title of this month's webinar is called "I'm Sorry, but the Multi-Unit Franchisee Won't Buy You." And again, this is me extracting as much data and information as possible. And I don't mean that as a criticism, but I mean it as clarity for franchise brands, because most franchise brands believe multi-unit franchisees are just waiting to discover them at a conference through a broker or through a great sales presentation or marketing. Like they're sitting on the sidelines. We want the multi-unit franchisee. How do we attract them into the brand? They're not waiting there. They're just not. Unless you are in the top 1 to 5% of franchise brands, you're not even on the valuation list. And that's what they're saying. They're like, look, the high performing and some of the PR that comes alongside that, I'll say that the Dave's hot chicken perception that, boy, they're exploding. What does that create? It creates FOMO. FOMO triggers interest. Interest triggers conversation. So no booth at the multi-unit conference is going to change that the 1 to 5% of franchise brands are the ones that are going to win the multi-unit franchisees. Multi-unit operators don't go looking for opportunities. They wait for signals. FOMO, unit sales performance, leadership that they believe in, some sort of buzz that breaks into that. So it's not marketing, it's not lead generation, it's not a franchise portal listing. It's really the momentum behind the franchise opportunity. And when you have the momentum, then what? So here's how the multi-unit franchisees actually think. And this is me sitting across them and asking the questions. I said, what are the questions that are important to you, Mr. or Mrs. franchise owner, that you're going to have a check mark, positive mark, not even a wavering in? 1, is the leadership credible? 2, is there a vision, as in like, can we see where the brand is going? 3, is the brand meaningfully different, meaning there's a point of differentiation in the way that they're presenting the business opportunity, so that the buyer is intrigued by this? Does the investment produce real wealth, not fake wealth, not these top line numbers? It's really about bottom line performance. They're in the business to make money. And when you strip away the emotional or fake emotional side and say, why are you doing this? It is because of money. Let's not try fooling ourselves. Is the growth strategy intentional? Meaning, like, are you just taking a shotgun approach? Or are you being intentional around higher performing units to say, let's fill in the marketplace? And our existing franchisees reinvesting, which I would almost reverse that and say that's number 1. So you notice what's missing from those questions, because I said, let's go through this. They're not asking how many leads you generate. They're not looking at how pretty your franchise deck looks. They're not looking how big your booth is. I talked about leadership credibility, vision, meaningful point of differentiation, investment potential, growth strategy, and our existing franchisees reinvesting. Now, those 6 buckets that I just gave are an excellent pathway for you to say, okay, now I have my content strategy to now go build that momentum, the signals. That's the categories that we're going to have to disperse. So they're evaluating whether your brand deserves their capital, point blank. That's really anything. Anybody could be a family member that says, give me some money. They are evaluating whether your brand deserves their capital. And you have to be on the other side saying, yes, our brand is deserving of your capital, and here's why. And so your website, your PR, your content, your industry presence, all of it should answer those questions that I just said above before you even meet these candidates. And most brands fail here. They don't have that drumbeat, or they hire a PR firm that does PR, but there's no strategy behind this on how are we actually going to answer the things that are important back to the multi-unit buyer. And it can trickle down, because even if a single unit franchisee buys in, no problem, let's focus on the big guy first. So the ROI truth that nobody says publicly is that serious franchisees are capital allocators. If they extracted all of the available cash flow, they take all the money that they have, they want to recover their investment in about 3 years. This means that if you're longer than that, they're going to categorize the brand as a lifestyle brand and not scalable or a hobby brand. It doesn't mean you don't have a shot to get them. It just means that it's not going to align with what the bulk of the top and highest performing franchisees want. When I'm talking to these franchisees over the last month, I said, what is your ideal payback? It went somewhere between 3 and 4 years. They said, if I could take every penny out of it, I need to be able to pay off that investment. And the idea is then I can keep rolling and rolling and rolling and scaling. And so this is why many franchisors struggle to attract the multi-unit buyer. They designed a franchise, but not an investment vehicle. And I tell you that because I've gone back to so many item sevens. Look at a grand opening that says $10,000. I go, great. What's our customer acquisition cost and what's the lifetime value of a customer? Let's look at an annual value of that customer so that we can engineer the investment to actually be sound, race to break even, then race to profitability. And so you've designed a great franchise, but it's not an investment vehicle. I've used this example before. We had a client that fired us. I looked at the business and they didn't like what I said. They did $1.5 million AUVs. Sounds good. Then I looked on paper, their corporate units, not subtracting royalty, we're doing 10% to the bottom line. That means $150,000 per unit. So what's your royalty? 5%. Great. What's your tech fee? 1%. What's your brand fund? 2%. So I said, we're somewhere between 0 and 3% left over for a franchisee. And they're like, what do you mean? I go, well, we just took out our fees. You're making 10%. Great. You make $450,000 on your first 3 corporate stores. Sounds good. But your franchisee is going to make 0. That's not a franchise. Now, they don't like hearing that, but it's very important for me to say that because it actually has impact back to whether they are going to be able to hit their growth goals or not. Multi-unit operators don't buy concepts. They buy compounding opportunities. So the question that you need to look in the mirror and say, can this be a compounding or scaling opportunity? Next point, you are not selling franchises. This is the mindset shift that separates breakout brands from the stalled ones. You are selling franchises. You're building a machine. You're not selling franchises. You're building a machine that opens profitable units repeatedly. You are in the business of opening units. Franchise fees don't create enterprise value. Open locations do. Healthy unit level economics do. Operators expanding inside your system do. The brands that go from 20 to 200 understand one thing. One great franchisee is worth millions in lifetime system value. One franchisee is worth millions. And so when I say to you, for $1 million, we'll not say millions, we'll say 1 million. For $1 million, what are you willing to invest to get the $1 million? This is an exercise that most brands fail at. They say, I'm willing to spend $15,000 to $30,000 per deal. I'm willing to spend the franchise fee. Great. If anybody that is watching this now or in real time, if you are willing to let me pay you, I'll even pay you double that. I'll give you $60,000 cash if you're willing to give me $1 million. I'll even triple that. I'll give you $600,000 cash if you're willing to give me $1 million. See, when you go through these exercises and start talking about it, it does make sense because you can see what return on value is, but oftentimes franchisors don't look at that. So the goal is more deals. The goal is not more deals. The goal is better operators who keep building. Next, the broker the broker conversation that franchisors avoid is that brokers must have a role, but they have to understand the math. Most broker models favor larger territories and multi-packs because commissions scale. I've seen it a million times. Broker goes, hey, franchisee X, you need to sign a 10-pack because then you'll protect your territory. Not exactly. Here's the unintended consequence. You accidentally drain the franchisee's growth capital before they open location 2 because they were so cash heavy on the investment from a franchise fee standpoint. Then development slows. Validation then weakens because you've overextended the cash point. They're stressed, and future multi-unit buyers walk away or they stall out. You didn't fail at sales. You weakened your future pipeline. Smart franchisors protect franchisee capitalization like investors protect cash reserves. And so when you think about this, I've been hot and heavy on this, on the size of the territory. It's so important because if you overextend the territory, what you've done is you've created a miss on the opportunity to expand within that marketplace. So that's an important part of the process, is to think about territory size, because once you start opening up the restaurants or businesses in that marketplace, other people are going to learn about the brand and want to buy in. You don't want to have to say you are sold out. Years ago, we worked with a brand in the tax preparation space. They went to H&R Block in Brooklyn. They said, I want to become a franchisee. They're like, we can't, we're sold out. They go, but you have 5 open in Brooklyn. They go, right, but we sold the rights to 50. You remove the future. That guy went on to build a multi-unit portfolio of locations. He was financially capitalized. He was rejected because of the territory. Point is, you reject future whales from getting into your system. So now the next big question, and really the big question, and some of you are already going, but should you go to the multi-unit conference? Should you spend the, say, $20,000 on booth time, money, some more? And yes, but it's not for the reason you think. You are not there to sell. This goes all the way back to the beginning. You are there to signal legitimacy. What we know about the conference is it is full of multi-unit franchisees. There's tons of them there. You can look at the attendee list and do the math. They are telling me they're not there to buy. They're there to listen. They're looking for signals, and your signal has to do there. So now, obviously, we're a week away from this if you're watching this live on Friday, March 20th. But if I ran your booth, I would do these 5 things. 1, book relationship meetings, not sales meetings, before the show starts. No walk-up selling. 2, ask operators for advice. Nothing builds credibility faster than having your operators give you advice on how you could break in. Lead with your unfair advantage. What is your unfair advantage? If someone walks past your booth, could you explain your brand in 5 seconds? Have that nailed down, get that pitch done. Engineer follow-up momentum. It's not just there because, again, like if they're not there to buy, you're not there to sell. You're there to signal legitimacy. So engineer the follow-up momentum, webinars, content, visibility, planned before you arrive so you know that you're going to create the drumbeat after. You just walk the floor at multi-unit conference, why you should not buy a franchise. Great. Now you give a point of view that says you're going to have to do your due diligence. There's plenty of good business opportunities here. You can have a point of view. 5, bring franchisees, not executives. Again, really hard to do in the last minute. Operators close operators. That's what I would do. So the hard truth that most brands need to hear: if multi-unit franchisees are not engaging your brand today, it's rarely an economics problem first. It is really a signal problem. You haven't yet shown the market your predictable success, your scalable economics, your leadership clarity, or your industry momentum. Multi-unit owners, buyers don't gamble. They invest when confidence, existing franchisees, already exists. The franchises that win understand this and would absolutely tell you this secret that you don't chase multi-unit franchisees. You build a system, they start researching you before they even met you. And most of them, I said, if you're going to the conference, and out of the 10 that I spoke with, 5 said, you're going to this conference, do you know who you want to speak with already? And the answer is yes. And that's because they're looking for the signals. And that happens when 3 things align: the business model, clear pathway to wealth creation. Look at your brand and say, is there a clear pathway to wealth creation? And if it's no, I would spend some energy taking a step backwards to continue to engineer that. 2, the drumbeats, constant industry visibility. They're saying this is where they're achieving the interest or building up the interest. It's through social and PR. And then expectations. They want transparency. Hiding things in an item 19, not being forthcoming in it, does create a signal to them that they're not going to be interested. And so when those things align, something interesting happens. And this is the big turn moment in franchising. You stop pitching. It's no longer a pitch. What you're doing is now you're taking the information that is showing the credibility behind the brand, and you're facilitating the answers to what these buyers really, really want. And so the sophisticated buyers are going to start calling you at this point because they're going to say, boy, that brand has momentum. And then what happens? They buy, they open. That's PR, more buyers, they open, and you hit this scale. Like, if we're being really honest about franchising, 1% makes it over 100 units. And so hopefully if you're on this call, hopefully if you've paid attention to this point, you know that this is your opportunity to stand up and take a different approach. if you look back at previous years that you've been here, maybe you haven't had the success, but maybe you have the right expectations that it's going to take time before you get to that point. I'm just going to put this question up here from Simon. What traits do potential multi-unit franchisees show at the discovery stage that sets them apart from owner-operators? Is it just capital? No, it's not just capital. Capital is one. So there's two things on the trait side that are important to look at when you're qualifying a candidate. One is, do they have enough capital? We're going to start with capital. Capital to open up one, to scale to two, and enough for a rainy day. Most smart investors are not overly cash heavy. They have their cash working in different things. So it's not as easy as let's pull out the cash. So some can. And frankly, in franchising, because the dollar is pretty much worth 90 cents, they know like it's going to have to be a really good opportunity if they've already built wealth for them to risk their wealth. So it's a really weird situation. That's indicator one. Indicator two is scale. I had a franchisee on a webinar yesterday, 5-unit franchisee. It's taken 12 years to get 5 units, and now he has plans to double. Well, what are some of the insights or takeaways? He understood, he worked through real estate selection. He wasn't afraid to close units in order to build the ideal portfolio of 5. He was willing to take the time to build up this portfolio. It wasn't a rush. He tried purchasing existing units that were for sale. He built ground up. And now he's ready to double the business. So if I go back to the beginning, I said, were you financially qualified on your own? He wasn't. So this is the hardest trait that you're going to have to figure out. And it's the currency of the mindset. If the franchisee has the mindset to grow, sometimes that's magic. Talked with a tropical smoothie franchisee. He said they should not have approved me. Now has gone on to be one of the bigger franchisees in the system. But he said they shouldn't have approved me based on the capital. But he had the heart and the head and the gut to take his unit and keep scaling. The last trait that I'll say, and this is sometimes a hard one, but it's almost like you have to be. It's going to go against some of the things that we expect, but you almost have to be unemotional about business. You have to be able to, you're going to like the category that you're in. You have to have some passion, but you're unemotional about the business, and you have to operate through a P&L. Because if you become emotional about the business, that might swing your lifestyle too far in one direction, which was going to limit the capital to reinvest, or it might derail the direction that you're going. And so if I'm oversimplifying the traits, they're going to need some capital. Capital is more of a definition today. I think heart, hustle, and gut is harder to come by. But we need to track them for a scale mindset. What does it look like? Again, and if you oversell a marketplace or there's not enough scale for them, that means you're going to leave money on the table. And frankly, your brand, especially if they're a first-time franchisee, to be a multi-unit franchisee, you're going to train them to go buy another business, and you got to be aware of that. And that's obviously we want to celebrate some of those victories. I was with another brand this week in Dallas. They have a franchisee who has scaled nicely with them. But for some reason, and it could be changes in leadership, it could be unit level economic and profitability. But you can see now their LinkedIn is showing that they've bought into a few other franchisors. I would be asking why. What did we not engineer about our business opportunity to make it right for you to continue to scale within us? So all of that point being, like, these traits, it's a human to human interaction. You're still betting on the jockey, not on the horse. And so take that last line. You're going to multi-unit conference. You are the brand. Be fearless, not fearful. Be fearless. Be willing to nail those points that I made. Hit that show, but also set your expectations. The odds of you, unless you're in the top 1% of brands, the odds of you selling a franchise at multi-unit is not high. But we don't go and propose to our significant other on date one. We take our time. And this is a relationship business, and it's relationship building. And if you look at this and say, my objective is no longer leads, it's relationships. And I hope to come away with 5 human beings that I've seeded conversations with that might not buy my franchise right now, might not buy it tomorrow, but I can pick up the phone and say, the way that we're building our signals, what do we need to do that, forget about you absolutely buying, what would you want to see out of our signals to make us want to buy? Use this as an information gathering session and you'll be set up to win. If you are going to the conference, come find me. We have a booth with Good Spark, which is the owner of Frank Camp. And if you haven't signed up for Frank Camp, we have one in June. Great mastermind, ability to work with peers to figure out this franchise growth equation. Hope you got some value out of this today. As always, as we posted on 1851franchise.com, so you can read back all the information and use it as a tracker. Again, come find me at the Multi-Unit Show if you need help trying to crack this code, because I can help you crack it. Might not be what you want to hear, but I can help you crack it. Have a great weekend. Take care, everybody.